Nothing said on forward guidance is a recommendation to buy or sell any investments or products. All right, what's going on, everybody? Welcome back to another summer edition of the Roundup on forward guidance. We're here in the doldrums of summer. It's almost over. It's almost back to Labor Day. It's Jackson Hole meeting this week. Lots going on in the macro world, to say the very least. Lots going on in markets. What's going on, Quinn?
Not much, man. I'm over in San Sebastian, Spain, eating and postponing my health bender that will have to come starting September when I'm back.
So you're like really focused on markets right now, I bet.
Yeah. Markets and paella.
Oh,
and
insane.
some Rioja.
I love Spain. No, I mean, it's the right thing to be doing right now. I mean, yeah, there's like a lot of big macro events, but the market structure side of things is still pretty pinned. Like, we haven't really been doing a whole lot other than outside of like the debasement trades like gold and Bitcoin. Like equity markets, it just, I don't know, we're just kind of chopping around, I guess, probably waiting for, I mean, we got the PCE number today, which we'll talk about, and then also NVIDIA earnings this evening, and then the Jackson Hole meeting speech. Seems like markets just is kind of waiting for all that to happen, plus like, Labor Day to hit and for the big money to get back to their desks, because the big money is in San Sebastian right now.
Yeah. Definitely probably going to win. I don't know if I can support myself.
Yeah, exactly. No, yeah. I mean, it's always important, I think, at the end of the summer to kind of just not try to make any really aggressive moves until Labor Day, at least. Obviously, we had like this bit of an exception with what happened last week and what we talked about with the gold and Bitcoin and precious metals debasement stuff. But otherwise, it's like, yeah, don't overanalyze the tape, I think.
Yeah, it's already low liquidity, low volume. The policymakers and powers that be are intervening at a extreme pace in a low volume environment. So you're getting bond market intervention, oil market intervention, vol compression. Like, it's not a time to make bets against that in a big way, probably, because there's no one here to really sell. But I mean, left tail risk is big if it happens because of that. But as we'll get into Warsh and all these things, like, they're doing everything to remove the left tail. So just bet on the stuff that they're pumping.
Yeah, let's get into the meat of this week, which is drama and infighting in the land of macro goats. We had Stan Druckenmiller, Druck, the absolute legend, and the master who taught all these proteges like Bessent and Warsh, and he wrote an op-ed, and we'll talk about the AI thing in a minute, but let's talk about the substance first, which is that yes, the Druck rendered an unfavorable opinion of Treasury Secretary Scott Bessent's use of buybacks to defend against higher yields in a market that is functioning normally. He said, "I've spent 5 decades trading on a simple premise. Markets aggregate information no committee possesses, and prices are how that information reaches decision makers. The long-term Treasury yield is the most important price in the world. It is also the only fiscal disciplinarian the U.S. has left. Every basis point of artificial yield suppression is a subsidy to procrastination. Return buybacks to their stated purpose, small scheduled, off-the-run liquidity operations, announce a quarterly refundings, never off-cycle like what just happened." And the last sentence, which might jump into anybody who has a keen eye for AI slop, if the 30-year must trade at 5.5%, to clear that isn't a crisis, it is an invoice. Obviously, totally. So yeah, this the message was clear, and anybody who's been listening or reading to Druckenmiller over the years will know that him coming out here and being a strong critic of government intervention and further increases in the debt loads, like, he's been banging this drum for decades now. So it's not really any surprise. I think what is surprising is that, I wrote this tweet out that there was a moment in time where it felt like there's this really idealistic 4D chess going on, that you have like the if you have Soros as like the goat of all time of macro, and then all his proteges are now suddenly in places of power. You have, Warsh at the Fed. You have Bessent at the Treasury. And then you maybe have Druckenmiller in the background as the linkage between all these different players, and they're going to come in and solve the big problems. They're going to solve the debt issue. They're going to solve deficits. They're going to unwind yield curve suppression, all this stuff. And so to see him come out and criticize Bessent, like, the initial reaction is, okay, well, this is obviously not nearly as coordinated as we thought. But I think some folks have already started to speculate on the secondary reaction, which is like, Druckenmiller is a market killer, right? Like, number one for him is P&L. And you do always wonder if he's just trying to test the bond market. That, look, if I can criticize Bessent like this, and maybe even Warsh too, and we don't see we don't see bonds sell off anymore, maybe that's a top in yields. I don't know. Anyway, I'm going on a tangent, Quinn. I'm curious, like, what's your read on this whole thing?
I probably have a different take than most on it. I do think, I mean, at the end of the day, the problems are so much bigger than Trump or Warsh or Bessent, right? These are things that are 20, 30 years of, to use this word, procrastination and kicking the can. So to think that they can come and solve it in a year and a half of a new administration is just not realistic. And I do think some of the moves they've started to make are positive, taking reserve management purchases to zero, um, you know, talking about what they might do on the balance sheet. The facts are it's just a much bigger problem than themselves. And so I don't know why everything has to just become instantly political these days, but I guess it's the nature of Trump's the division or whatever that he kind of drums up. But I didn't think it was that crazy. Like, I would say I'll preface it with I don't know if this was coordinated or not, but there's a lot I don't know about what goes on behind these doors. These are very powerful people, but it would be shocking to me if this wasn't coordinated. And he just lays out what needs to be done, and it's nothing new. He's been saying, like, this ultimately has to be fixed by Congress. So in a sense, he's kind of trying to take the pressure off Bessent a little bit and saying, like, hey, this is what needs to happen. If yields go to 5.5%, which they very well probably will, it's not Bessent's fault. It's Congress's fault. And Bessent shouldn't step in and do this. I totally read it as the opposite in saying, like, okay, when shit hits the fan, like a total trial balloon. Okay, when shit hits the fan because 5.5%, 2, 3, 4 months ago from now, don't point at Bessent. The best investor in the world, Druck, said he shouldn't do that. Point at Congress. They need to fix it. So I just interpret it so differently. Like, if you remove the politics, and in my opinion, he's just kind of pretty objective. And Bessent very well knows this. Bessent has said the same things before he was in office. He was criticizing Yellen. He's criticizing Congress for running the deficit so big. And he can't unilaterally change any of that. So I think he kind of like asked for some help from a friend here to plant the narrative. I I don't know. I've just a totally different read than what I was seeing on Twitter. Like, people were so emotional about it. And
Yeah. Claude, write out a op-ed that blames Congress for all our issues and not the head of the Treasury.
well, I'm kind of curious. It'd be fun to know how he wrote this. Like, did he post 4 links to a bunch of interviews he did of him talking about this problem and say, Claude, write about this? Did he give it a synopsis and say, touch this up? Like, it's kind of funny, but I guess it shows he's bullish AI because it's helping him write market moving, op-eds.
Yeah. I mean, there has been an interesting debate on, setting aside the political debate, the actual debate around, like, the future of linguistics and society and how we communicate has actually been quite interesting, because it's like, okay, one, you have one of the most revered publications ever, the Wall Street Journal, who's, admitting to the published AI generated content, which is one very interesting. You have one of the greatest macro traders of all time who's saying, "Yeah, of course I use data." Like, he's not shying away from it. And he said that, like, look, my name's on the note. Like, it's clearly my message. Doesn't matter how it was formulated. Like, obviously a more chill version of this decades ago was like, okay, use spell check in Word, right? Like, does that mean it's not my wording because of that? It didn't come from my brain; it came from the computer. So I don't know. I mean, it's quite interesting. Like, I'm certainly sympathetic to the idea of not like outsourcing your opinion and thinking, but using it to refine. And yeah, I mean, maybe he just wrote out some bullet points and then had AI just try to just dress it up a little bit. And through that dressing up, like, I feel like, I'm not going to say that Druck is not tapped into AI. Obviously, he is. He wrote the Nvidia trade for a while and all of that. But like, to really to really understand like how cringe some of those AI isms are, like that it's not this, it's this type of stuff. Like this isn't a crisis, it's an invoice. Like, obviously, I've had AI write things for me, like, and then sometimes I'll just make sure that those AI isms aren't incorporated, and then so it's almost like the opposite, where I might just use it for like idea or structure generation, and then maybe I'll write it out myself. I don't know. It's an interesting debate that's going to just accelerate, I think.
At least he took out the double dashes. Those are the most dead giveaways. So
Yeah,
he
no
did a
no end
little
dashes. Yeah.
he did a little pruning, but I again I kind of side with him. It's like, it's like in grade school when someone's copying a friend's homework and then they change the structure of the sentence in 3 words around. It's like, well, did you write
Yeah.
that? I mean, I guess. So like I don't really see that big of a problem with it as long as it doesn't, you have to play with it and reread it and what you produce, because it does produce some like just totally off base stuff that you're not trying to say. So I kind of agree. I mean, we all use it every day for our research and like, okay, I mean, I still write like 99% of my stuff, but
Same.
I'm sure
Yeah.
as acceptance moves on, like, no, you need a graphic for an article. Like the journalist doesn't draw it, right? He finds something on Getty Images or like, some creation. It's kind of the same in my view. I don't know, but I'm not an artist, so maybe I take less offense to that.
I mean, I guess the other side of the coin is like human communication is like a very sacred, point. Like, this isn't about this is like words coming from our mouths written into paper. Like, that's it's like, I don't know, it'd be like, deciding that all of humanity is just gonna have like sex robots instead of like actual partners in life, like, it's
I
just
mean,
like, you like, those things are, I don't know, it's like, what's humanity if we don't have those sort of things?
right. On the other side, though, it's like 90% of people in the world probably don't want to listen to read a macro investors like, you know, writing, because it's probably boring and shitty. So like I know
Yeah.
when I'm writing, it's like number, data point, this happens, then that. It's like, so
Mhm.
maybe AI could help. I don't know.
Yeah, yeah, it's interesting that Druck felt like he had to do a post interview about his op-ed. So like another publication interviewed him, and that's where he's like, "Yeah, of course it was AI," and he's like, "Look, I got more compliments about he's a genuinely one of the most humble probably goats of all time. Like, he's just like, look, I got more compliments of people saying the writing was great, which says a lot about my own personal skills." And he said, like, yeah, I was an English major, and then I moved into being an economics major because I was so shit at it. Like, that should have been telling. Like,
I love
I
that
mean,
dude.
it's so cool.
Yeah, he's a beauty.
Yeah,
He seems
yeah,
like an awesome dude.
yeah. All right. Anyway, yeah, a lot of speculation, a lot of emotional debate going on out there. I want to tie back into markets and what else is, last week we talked about this framework of like the maxima of what's possible, that Bessent can do, and how we felt like it was more in the early innings than you know shooting all the bazookas at once. Like, just going from 2 to 4 billion buybacks is, it's more just a signal of the starting of the race than the end. Pretty quickly we got this news from Steve Leisman at CNBC mentioning that the Treasury could use its near $1 trillion in the TGA to help fund its recently announced plans to increase purchases of government bonds, according to two senior Treasury officials. Using the TGA would provide the Treasury with considerable firepower to influence long-term bond yields. So a lot of funny circular logic here, in terms of just like technical mechanics of how the TGA works. But one, the TGA is funded largely by bills or tax revenue. Um, and the reason there's almost $1 trillion in the TGA is because we issue so much bills, and they have to target they need to be able to have about 5 days of spending within the TGA. So as you issue more bills, you basically need a higher proportion of cash in the TGA. So it's just in this entire circular logic. And I mean, in practice, like the idea of issuing bills to buy bonds versus just using the TGA to buy back the bonds is really just like semantics around timing. Like obviously, if you just tap what's in the TGA already, you don't have to issue those bills. So really, it's just like this timing lag. It's almost like this trade of delaying the issuance of the front end to be able to buy the long end. So we didn't obviously get this from Bessent directly. This is more of a leak from the CNBC, but yeah, it just shows that they want to go big here. Bessent he's ready to do the fight against the bond vigilantes, and he does not want to see that 10-year above 5. How do you think about this? Is this lining up with how you see the sequence?
Yeah, I agree. I mean, it's all mainly talk for now, and that will work in the short term. It has worked in the short term. So when you think about boogeyman risks to the market, right? You have bond vol and yield blowouts. Bond vol is now in the gutter as a result of these actions. So you take that big risk vector off the table. Oil prices, they've continued to be able to suppress and manipulate those lower. That's oil volatilities at near its lows year to date. That's taking that risk sort of off the table. And you have a Fed under Warsh who, is talking tough and sort of signaling towards things he wants to do to reduce the duration of the balance sheet, et cetera. But he's not going to hike rates. He is not going to hike rates. The Fed is not going to do that. And so when you zoom out, like it's pretty bullish conditions for inflation to stay sticky and trades that have been kind of running on the back to continue working, because it just doesn't end this way. Like you don't calm a multi-trillion dollar bond market with just some words. But that said, it can work in the short term. So I think that's what's really throwing people for a loop is like, yeah, if the printer of the currency or the issuer of the bonds comes out and says like we're going to do all these things to suppress yields are going to fall, and speculators are going to say, okay, I'm going to take my ball and play on a different court. Maybe I'm going to go to debasement and metals and Bitcoin. And then like, I might as well just do that, because if yields blow out, they're going to do this and debasement's going to go up. If yields go down, debasement's going to go up. So like you get that in the short term. And that's kind of how I think, I don't see massive broad market risks over the next week or 2 or 3. And I can get into why when we talk about Jackson Hole on Friday. But by no means, as Druck points out, is this solved. Like the deficit still is what it is. It's growing. Interest expense is rising. Inflationary pressures are not going away, and they're not going to go away when you continue to stimulate. The economy's fine. Growth is probably fine. So I think it will rear its head again. I mean, it's just a matter of when, and like when do they want to let it organically materialize into an actual market event versus stymieing it. And it goes back to last week. It's like in early and mid August, 3+ months out of midterms, they're intervening. Why in the world in the next 1 week, 2 weeks, 4 weeks would they all of a sudden say, "Oh, we're going to decide now that we're even closer to the midterms to let this thing go"? It just doesn't make a lot of sense to me. So that's kind of what I'm running with for the next few weeks, because like otherwise, like they're debasing fiat and they're telling you what they're going to do, and I'll reevaluate as we get closer to midterms, because then the incentives change and they actually probably will want to put some deflationary pressure and downward cyclical pressure to materialize the next series of events. So, but until then, like I think you can rest on it. Like anything you can't print, you probably want to own.
Welcome to Token 2049.
Token 2049 Singapore is back October 7th and 8th, bringing together 25,000 attendees, 300 speakers, and 500 exhibitors for the world's largest crypto event. Token 2049 will be happening at the same time and in partnership with our own Digital Asset Summit Asia. So come check out both conferences during the same week. Across Token 2049 week specifically, there'll be more than 1,000 side events, culminating with After 2049 and the Formula One weekend. And the speaker lineup is stacked across the board. Shane Copland of Polymarket, Jeff Yan of Hyperliquid, Arthur Hayes, Balaji, NASDAQ CEO Adina Friedman, and many more. Join us in Singapore this October for Token 2049 and the Digital Asset Summit Asia.
Avalanche Summit is coming to New York City, September 16th to 17th. Join the business and technology leaders building the next generation of financial products, enterprise systems, and consumer applications on-chain. Learn how blockchain is enabling faster settlement, more efficient markets, and new business models at Avalanche Summit NYC. Register for Avalanche Summit and use promo code BLOCKWORKS15. And ahead of the summit, you can track Avalanche tokenized equities alongside tokenized treasuries and their growing footprint on Avalanche. See the data for yourself with Blockworks Research's Avalanche dashboard. And don't forget to join us in New York City for Avalanche Summit.
Okay, I'm gonna play. So let's get into the Jackson Hole thing. This Warsh's speech is on Friday, so we'll have this out tomorrow on Thursday. So we'll frame this as a primer if I were thinking about the framework here. So, typically these Jackson Hole speeches are opportunities for Fed chairs to really reveal big shifts in how they're thinking about like more longer term policy. They're not just caught in the weeds of what are they doing in this singular meeting. So there's a few different ways that this could go. For me, it's like, okay, Bessent has laid his cards out on the table. We know what he's working with, and we know what he's trying to do now. To me, the big question is, how does Warsh and the Fed react to it, and how do they react to it within the context of a Warsh, of a Fed chair that's talking to the president on a weekly basis, that's talking to Bessent on a weekly basis. Like, it's going to be very revealing how he reacts to what's happened, what Bessent's been doing in recent weeks. So, okay, if there's a couple ways that this could go of how I'm thinking about it. One is that he will use Jackson Hole as an opportunity to talk as much hawk talk as he can, because there's really no repercussions to it, because there's no rate decision. So he can talk hawk during Jackson Hole, and then once he gets to the September meeting, not hike or anything like that. Why would he do that? One avenue is to try to tame the long end. Obviously when he tried to do this in the last press conference, he was trying to talk hawk without hiking, and everybody called his bluff, and they're like, okay, well, if you're saying all these things, like, why the fuck aren't you hiking? And that's kind of why the long is sold up. It's like, look, there's no rate decision meeting at Jackson Hole, so he can talk a big game, try to tame that long end, and then just reverse course in September. So that's obviously one avenue. I would say that's pretty. It achieves some goals that are similar to Bessent, one being like lower yields, but it's also like going to cause higher volatility in markets. The second avenue is that he's, maybe he talks a bit hawkish on the balance sheet and talks about, we're trying to reverse course out of what we've been doing in the long end. But then he's more dovish on the short end. And why would he be dovish on the short end? Maybe he hints at, actually, I know RMPs, like reserve purchases, are supposed to go back to zero. But look, like if Bessent's trying to issue a bunch of bills on the short end to fund the bonds, like eventually, if you issue too much bills, you start to get pretty large, SOFR basis volatility, and you could see those short-term money market rates start to go above SOFR, which is when things get hiccupy. So maybe he tries to be a bit more hawkish on the long end so that he can rationalize not hiking on the short end, keep that rate low, and then maybe hinting at bringing back RMPs so that he can help smoothen the runway for what Bessent's trying to do, which to me, that would be a pretty large signal of pretty significant coordination. So yeah, those are the two big ways I'm looking at it. I'm curious, like, yeah, what's your framing for Jackson Hole, Quinn?
So to your first point, or potential scenario of talking tough on the front end and being able to push, I'm not so like I don't. Although, well, two problems. One, if he does that, just generally, I don't know that it does tame long end yields like a hawk. Like I'm not certain that the market would react that way. But two, his whole tenure and all of his material leading up to it, his speeches, etc., have focused the hawkishness on the long end. Obviously, the committee's stuck in this hike the front end, and they want a huge balance sheet and all this stuff.
They
And
don't
he
even
wants to
talk about the
reverse
long. Yeah.
yeah,
Yeah.
he wants to reverse that. So he wants to be hawkish long end, dovish front end, and reduce balance sheet and those things. A month ago, I would have said, or 2 months ago, whatever, I would have said, and I think I did say on here, like, I would expect him to, if he wants to actually be hawkish, he will do that at Jackson Hole and really, start saying this is what we're going to vote on and we're going to implement, and this is why the balance sheet should be smaller and less duration, etc. The problem now, post the last 2 weeks, is he can't, like, if he talks hawkish long end, we know he fundamentally does not believe the front end should go up, and he will not, in my opinion, be hawkish on the front end. So his avenue is the long end balance sheet. He can't, like, he's throwing gasoline in. I mean, you can call it his colleague or his counterpart or his,
Yeah.
I'd say boss. Like, he's throwing gasoline in Bessent's face if he talks super hawkish balance sheet, because that's bad for the long end and causes yields to rise. So I think what was an event or interesting over 2-4 weeks ago in terms of this Jackson Hole, I think it got totally neutered because the market started reacting. People are like, oh, this is, there's inflation, the long, Warsh wants to sell duration, whatever. And it got neutered because they intervened with the buybacks and the doubling of the buybacks and the tripling of the buybacks and the TGA of the buybacks, like consecutive days. So I think there's almost no reason or will or why he would be hawkish on the, because, like you said, it goes exactly against what this administration is trying to achieve, both politically into the midterms and through their actions near term as to what they've been trying to do in terms of suppress yield. So it feels weird saying this because, like, I don't really have a strong view on bonds here. I surely wouldn't want to own them, but I don't know, like, they're kind of, yields have come down. Maybe you short them, maybe short bonds here, play for higher yields. But going into Jackson Hole in particular, I don't see any reason or why they would choose that path of stirring up shit. And I don't think they have the latitude to do so. So I think it's a nothing burger, to be honest. Like, I'm not really worried about it at all.
Yeah, it's interesting. Probably directionally agree with you that it seems very unlikely for him to go against them that aggressively. I mean, for sure, like, I found these couple charts quite interesting, just looking at where the move in rates has been, and you can see it's largely been term premia versus rate expectations. Like, the rest of the world, their long ends have been repricing quite significantly on slightly more hawkish rate expectations, but you can see that, like, a lot of the move in the US has been in relation to term premia. Term premia, this is just, everybody has an opinion on what term premia measures. But to me, I think it's quite obvious when you just look at the contrast between these two that this sell-off has been, in terms of it's been a bit more about a crisis in confidence on, the situation that the US, whether it's the fiscal situation, the deficits, or just the intervention style. But when you pair that with the fact that, all right, they've clearly decided that they're going to try to, even though Druckenmiller disagrees, they're going to try to force the market to the price that they want. And once you start that process, you cannot stop. And it's a very nonlinear fight. Like, it's like, it's almost like an asymptote where like, the closer you get to your target, the more money you need to spend because the market knows what you're trying to do. And it's just like exponential more amount of liquidity or dollars, which is why like, I'm still extremely comfortable in my debasement trades of gold and Bitcoin. It's been a good week for them. And, I want to ride those coattails. I probably agree with you that, there's some decent short-term shorts to be had in bonds, but I'm just like not interested in that game. Like it's such a shit market to trade these days. Like the long end. I'd rather just own the assets that are gonna do well. Like you said, the things you can't print.
Yeah, me too. I mean, the bond market and interest rates are more mean reverting than most asset classes. So you have to keep that in your mind if you're evaluating these markets, because high rates beget lower rates and lower rates beget high rates. Just like commodities, high commodity prices solve supply shortages because they bring on production, and then prices fall. Low prices stimulate demand, increase, consumption, and prices rise so it's a similar dynamic where stocks obviously have an upward drift because earnings grow and, over time they compound. So stocks and gold and Bitcoin seem to have more of an upward drift. So that's what I would just say. I mean, the chart you pointed out, term premiums rose dramatically, yields rose dramatically, real rates rose dramatically to very, very high levels on a historical basis. And that has an impact on activity, economic growth, housing, all of these sort of underlying engines in the economy. It restricts financing conditions, makes it more expensive to raise debt. So I think that, the fiscal impulse conditions aren't really there so much going into the back half of the year to really get like a crazy, 2022 style trending yields environment. So I would kind of be biased towards mean reversion. But that said, like there is a just very ugly structural outlook for bonds, sovereign bonds, that like I definitely don't want to long them, but I don't think this is like an attractive place to short either.
Yeah. All right, let's get out of the monetary fiscal world. Talk a little bit about other parts of the market. Anthropic IPO is coming up, which I want to get your take on. This just hit the news, but Anthropic expected IPO at larger market cap than SpaceX after telling investors its revenue could exceed $30 trillion.
Just like
let's just it reminds me of during the hype of the crypto bubble, where like ETH maxis were comparing the price of ETH to global GDP and saying it could go or like the global M2. Feels like the same thing. At the same vein of them talking about this and trying to rush for an IPO, their 4-week growth rate of their revenue has actually been slowing down. And for those that are pretty tapped into this side of the market, like there's been a pretty significant improvement in competition, especially around open weight models. We started to see some like really significant improvements on that side of things, to the point where like you have to start to question about whether, one, are these frontier models, are they going to get commoditized? Is it going to be a race to zero in terms of margin? I certainly think that, Anthropic and OpenAI are really going to have to do something really special over the next year to stay ahead of these open weight models. I mean, really, the bet is that they get to like recursive self-improvement before anything else. And then that just like permanently keeps them at the bleeding edge. But I feel like if that doesn't happen anytime soon, their moat's just going to keep getting eroded away. Like, SpaceX even is really killing it. Like Grok bot, I've been using a bunch lately, and it's just like absolutely incredible. Super, super fast. Like the cost of Grok 4.6 is a fraction of the cost of an Opus or a Fable model, and it does a really good job. So, it's interesting to me that they're racing so quickly to try to get this IPO at the door. You never really want to. You gotta wonder what's the rush, right? Like, what are they not telling you? So anyway, yeah, curious how you're thinking about this. Like, I'm a huge, structural fundamental AI bull, but it's not like that's more about adoption and use case, not about margin protection for frontier models. Like, I think there's going to be a lot of competition. That's kind of where I'm at.
Yeah, I mean, first of all, yeah,
Mhm.
this is goofy. I mean, this is just goofy. I think that
Mhm.
there's reasons that are not positive ones why these guys are sprinting to the market. In the same way, SpaceX still has over $1 trillion of market cap to unlock in the next year, less than
Mhm.
9 months, basically. Like, it's it's laughable, and it's honestly, I just go back to, it's like, you know, it's sad in a way that this stuff is just getting stuffed in on the public and in these indices at these levels. It's
Mhm.
just it's why the populism stuff is just going to keep going up and up, because you get these outcomes and events that it's so egregious. It's pretty gross. But
Yeah.
when you look at that chart, there's a chart floating around of Chinese model
Mhm.
token usage relative to
Yeah.
US, and it's a vertical linear line since earlier this year. And I mean, is that the elephant in the room no one's talking about, that US is losing the AI race? I mean, yes, we have the frontier labs, and okay, maybe the next cancer curing drug is developed using
Mhm.
that or what have you, but the majority of the value accrual is when it comes from to a company specific basis. It's very clear these frontier labs are competing each other to zero, and or
Yeah.
that's at best. At best, they're competing each other to zero. At worst, they're completely losing market share and value accrual to open models and Chinese models. So it's not pretty. Like, no matter
Mhm.
how you slice it, it's just not a good look. And if you remember, June 12th or whatever day SpaceX IPO'd was, I think, the top in the market in the
Mhm.
Nasdaq. So
Yeah.
they
Well,
need to
and
keep
these
it pumped until then, and then,
mhm.
uh, let it go, I guess.
Yeah, I mean the political volatility is also huge. Like, these frontier model CEOs are not doing themselves any favors. Like where the hell is their PR team? Like, for the last 6 months, they've been just telling people that, all jobs are going to be replaced. You're going to be poor. You're going to be the permanent underclass. Everything is going to be crazy. If you're not working on one of the frontier models, basically you're screwed. We're going to take your job. And then they act surprised when suddenly, the vast majority of that lower end of the K of the economy is suddenly upset about data centers. And, like, yes, their arguments are irrational, but their reaction is actually, quite logical.
Mhm.
They're being told that their jobs are going to go away, and that there's these big scary buildings being built in their backyards. So, it's quite concerning. Like, I yeah, I obviously the arguments of, like, water usage and stuff, like, they're completely ridiculous. We all know that, but it doesn't matter. It's a political reaction to this environment that the frontier model CEOs like Dario created with their hysteria, and now it's going to come bite them in the ass, because, what if, like, there are now parts of the Republican Party that are, people are running into this midterms that are anti data center. And then what happens? Okay, so your last stronghold is the top end of the K. Are people going to be so pro data center if you IPO Anthropic at 2-3 trillion and dump it on their heads, and they get smoked? Like, that's your last stronghold, and then, like, I don't know if it'll happen. I mean, like, you know, SpaceX still hasn't returned to where it IPO'd at. That's a lot of burnt money. I imagine it would happen again at Anthropic. Like, the moat just doesn't seem durable to me, and they're going to try to rip this thing on a promise of a $30 trillion revenue outlook. Like, I don't know. I mean, I don't know why they're trying to make the whole society hate them, but they're doing a really good job at it.
It's like, I mean, maybe this is a part of the market. Crypto investors are well suited if they have any, recollection from the bubble in 2021, because it's all the same things. It's these
Hmm.
promises not delivering. It's these huge pops on the launch of the IPOs, and then horrific performance after as all the VCs dump into their liquidity grabs. And then on top of that, you have the main characters following suit. You have Dario, who's doing this, and
they're all effective altruists once again.
And they couldn't be worse spokespeople.
Yeah.
I remember specifically saying how weird it is. The storyline of situational awareness was to FTX, and the things that were happening where everyone's like, wow, you had one faction that was like, holy cow, this guy's rolling with Bill Clinton's of the world, and he is absolutely the next coming of Christ. And then you have the other side of the world where it's like, this is obviously a huge fraud. It's obviously going to blow up, and like there's something really fishy here. And it's, in the case of situational awareness, now they're getting investigated at the SEC because his wife is the Anthropic chief of staff, and who to better have inside information on what's happening in the AI trade. Like literally Sam Bankman-Fried to a T. And then it turns out he worked with Sam at that fund. Like
he ran the venture. Yeah.
Dude,
there's so many. Dude, there's so many mirrors to crypto. Like, okay, so for those that don't know or aren't in the weeds of the crypto world, like 2021, the reason it was so ridiculous was this idea of a fat L1 thesis where all the value would accrue to these L1 blockchains. So then all these VCs started to launch all these different L1 blockchains, and they would launch these things at multiple $billion valuations on the idea that all the value would accrue to the protocol itself, not the businesses being built on top of the protocol, but just the infrastructure. All the value would accrue there. If that sounds a lot like a frontier model valuation, it's because it's the exact same thing. Like there's been this idea that all the value would accrue to the frontier, to the models themselves, and not to the things that people use the models to build upon. And so what happened is that 2021, et cetera, like they were able to launch all these things at absurd valuations. And then they were just down only as people started to realize that like there's no moat for these L1s. They got commoditized, fee generation on these L1s all got commoditized down to zero. And to me, it feels like a repeat with AI where it's like they're going to launch all these frontier models publicly at these absurd valuations, and then we're all going to realize that so much of the value is going to accrue to what people do. Or then came this idea for crypto is about this like app chain thesis, or like applications that are built on. So like that's why you see Hyperliquid or Pump Fund actually generate revenue. They're profitable businesses, wildly profitable, and they're built on top of the blockchains that they're leveraging. To me, I think that's going to be the same value generation here with AI. Is what are the things people are building upon it? Maybe the harness that people use, like there's going to be a lot of stickiness there if you build out your workflows. There's some cool businesses there. But yeah, it feels like the valuation side of things is just completely upside down right now. Yeah, reminds me to a T of crypto 5 years ago.
It's so scary how similar it is, man. When you lay it out like that, I actually, like, my mind is blown. How the storylines are the same. The dumping on retail is the same. The biggest difference though is AI is like the government's pumped it so much. It's like the sole driver of our economy, and they're now have this like totally systemic, interlinked, circular financed, like huge mess on the other side of this in their hands. Whereas crypto was a side thought. Most people didn't own it. Most people didn't care. They already thought it was a scam. Like this is like intertwined global economies, government intervention, like to a crazy magnitude and scale. So yeah.
Eventually a decision.
The ending of that 2021 crypto, every part of the story is playing out so far well, and if you live through that was a disaster. So
I think the difference this time is that they will bail this out at the first hint of it going wrong. But I mean, this is the whole thing, is that there's a decision does have to be made eventually. Like, do you protect the margin of the frontier models, or do you ensure that adoption keeps increasing in Western countries to beat out China. Like I think it's becoming increasingly clear that you can't really have both. You can't be charging absurd margins on frontier model usage and dominate adoption, because people will just go to these open weight models because they're like, I can get 80% of the intelligence at a fraction of the cost. Like, obviously I'm going to do that. And you can, if you're using one of these models that you run locally, like you don't, it's your own model. And then you can like post train it in certain ways that are relevant to your business. Like right now it feels like they just want to be able to win in every way, but I don't think that's realistic. Like, something has to give.
Well, going back to what you said, this time the government will bail it out. Well, what happens though if Dems win the House and maybe the Senate, and a bailout requires congressional approval? So, I mean, the banks, systemically, you need a bank to buy a car, to buy a house, to get a loan for a business. Like, this is sort of opposite. Like, if you're on the fence about AI, it's like, do I vote to save this thing that puts my constituency out of work? Or you have the AI guy, Dario, the face of it, saying, bail us out, save us, nationalize us, because we're going to create a dystopia and like lay everybody off.
You can trust us.
Yeah. Or do you have these people elected by populists say, you know what? No, like, you guys siphoned trillions in wealth in 3 of the largest IPOs of all time, dumped on retail heads, huge, the wealthy got wealthier. No. So this setup is just, there's way more, like, I think the midterms, so you have this huge intervention, so that's smoothing over all the liquidity cracks going into the midterm. So people are like, oh, stocks are at highs, it's fine. Meanwhile, under the hood, you're like, oh my God, like, they've drained the SPR and the strait's still closed. Like, the AI trade is cracking left and right, and China is now out ahead, and these problems are massive. And I think because everyone knows that they're gonna lose the House, like, Trump's approvals in the gutter, and the Senate's kind of a toss-up. So there's not like a lot of uncertainty in terms of the outcome, right? It's not like Trump versus Harris going into 24 where everyone's like, oh, who's going to win? What's it going to be? I think you kind of know the outcome here. But what people aren't probably appreciating enough is like, what sits on the other side of that? What sits on the other side of that? It's a debt ceiling crisis, an AI crisis, like no agreement. We've seen that the Dems and Republicans can't work together. I don't know, man.
Just gridlock.
It's a weird state of affairs.
I mean, the only action is just going to go to either the executive branch or the Fed. Like, I mean, the Fed could just buy AI corporate bonds. I mean, they bought corporate bonds in 2020. Like, Warsh is just like, we're buying Oracle bonds. Like, I don't know. It's definitely not a 0%. Oh my God, he would probably be front running it. Honestly, he's a killer. He's probably he probably owns the bonds that they're buying.
True.
Yeah. I mean, I don't know. I mean, it's not a 0% odds.
I mean, they did it already. Like, we we just forget about it because every time in between these crises is like 5 years, so everyone's like forgets that these things happen. But when you zoom out, you're like, oh, in 2002 they like stimulated like 50 billion. Oh my God, in 2008 they stimulated like a couple $100 billion. Oh my God, in 2020 they stimulated 4 trillion. And then you're like, wow, the numbers are all orders of magnitude bigger now. Like, what's that gonna look like? I mean, it that's why the debasement trade is going to work, because the end state is inflation and fiat going to zero.
And even the games with the bond market are not new. Like, the 20-year bond they suspended in early 2000s and then only brought it back in 2020. Like, they just stopped issuing 20s. I think they did the same thing with the 30s. There's a time period back then where they just stopped issuing 30-year bonds. No reason why that can't repeat.
I think it was 2003. He increased buybacks. It's It's just a circle, man.
It's been the same one-way direction of can kicking basically since long-term capital bailout. Like,
Yeah.
it's
And look
just
at
been a
gold.
one-way track. Yeah.
The gold bull market from then until 2011 was an
Mhm.
absolute monster, and also nowhere
Yeah.
near to way bigger than where we're at right now.
Yeah. Yeah.
The
So
question is, when
yeah,
do you start
don't.
rotating into the beta metals outside of gold and going for the stuff that's really going to fly? Like what's the
Yeah, I
timetable
haven't
for the
done that
next
yet. Yeah.
the silver blow up? Like, surely it's going to come back.
Where
Like,
we at?
right? I mean,
Okay, yeah, silver's at $67. Yeah, it got up to 120. That was insane in February. I don't know. I wouldn't be surprised if it happens again.
yeah,
You
I
just need the
mean,
timing. Like, yeah.
yeah, I think it will. I think it's kind of like in crypto, right, man? Like, it's like a reflex. It's like, okay, gold's ripping, conditions
Yeah.
are loose, and then maybe the speculators aren't fully gone from their AI yet. They will be soon, right? Anthropic's gonna it's gonna be like, the next dagger once that IPOs. So then you have $2 trillion companies unlocking their shares. So then everyone, the hot money in the AI trade, is probably really gonna leave for good after that. And then where do they go? Like, you go to the debasement.
Crypto. Just in
Yeah,
time for the next cycle. Yeah.
yeah, exactly. Fourier theory strikes again.
Yeah. I'm never talking shit about that cycle ever again. I ate my humble pie.
Yeah, we were bashing it, and then boom, it happens like common.
Oh, yeah. Taking that L. That's okay. I mean, still long near the bottom and got out fairly, obviously impossible to time it on the top and the bottom, but you just try to ride the meat of the move. So, long and strong and riding the wave here.
There's a lot of trades, always new opportunities.
Yeah. All right. Well, I think we can leave it there. Yeah. Always a good discussion as ever. We'll see where this all pans out, but the basement's back on as usual.
Yeah, brother. I might be next week, so listeners might have to wait till post Labor Day for our next rendition.
Go. Yeah. Go touch some grass. Like, it's yeah. We'll all lock in and after Labor Day. That's the plan.
I love it. Good stuff,
All
brother.
right.
You have a good week.
Have a good week. See ya. Nothing said on Forward Guidance is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice, or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research.